welcome to the Blue Swan. Today we have Taha Mubashir, who is a partner at Inovia VC. It's one of the top venture capital firms in Canada, $2.5 billion assets under management, and approximately 39 unicorns in their portfolio, which is very, very good given the fund size. And so on that note, all you, happy to listen.
Hey, thanks for having me, Sean. I am a partner on the team. Joined Inovia about 4 years ago, but I went to a school in Canada called Richard Ivey School of Business and did investment banking straight out of that. My role there was, the most junior person doing anything that the senior bankers wanted with respect to M&A, whether this was, presenting, and preparing presentations, running financial analysis, etc. So that got me super excited about the private markets and piqued my interest in investing in the private markets. From there, went to private equity. I was at a large Canadian pension plan called PSB. They have beneficiaries, government workers in Canada, the police, the army, etc. The Canadian private equity and pension funds have really gone into the private equity market and went into it very early on. Private equity programs tend to be a large portion of what they do. There, I was responsible for sourcing and executing transactions in both, I would say, the software side of things, but then I was also involved on financial services side of things as well. While I was at PSP, while this wasn't necessarily my main job, we were also looking at dabbling is what I would say into venture capital and growth equity. And that gave me my intro into I would say late stage growth. I wouldn't call it venture capital. I had the privilege of investing in companies like Palantir, Snowflake, and it really opened up my mind to the other side of investing, which is really focused on innovation as opposed to improving the operations of a mature legacy business. Predominantly because I used to program as a kid, but as I grew up, I kind of lost that along the way. Went to college, etc., focused on finance. But once I got the flavor of that again, I really wanted to be part of that ecosystem. It is very fascinating to say that you were part of, or as a passenger, in something that's so big. Again, we're not building the business. It's entrepreneurs get all the credit, but we're really riding sort of shotgun, and being there for the ride. So that led me to my venture capital career at Inovia Capital. We are a 2.5 billion AUM firm. I've been around for close to 20 years now. Each partner or leader within the firm has areas that they focus on. For me, it's been cybersecurity. And as a firm, we call ourselves full stack, or you can call it end to end. We invest all the way from pre-seed to late stages of growth. Now, where I focus predominantly is on Series A and seed stage companies. At the seed stage, we're looking to put in anywhere from, I would say, like 2 to 5 million per company, and we predominantly lead. Series A, I would say anywhere from like 10, 12, 15 million in equity. But as a firm, we also have resources which we call the platform team that supports our companies. One main sort of feature ad that early stage companies always ask for is our CTO office. Our CTO office is run by Steve Woods. He was a senior executive at Google. He started his entrepreneurial journey early on and sold his business Quack close to the dot-com days to AOL. And that was the first, I would call it, a voice assistant for shopping, focused on movie tickets. So through him, our companies get access to top tier folks at like Google, X, Anthropic, OpenAI, and the likes, and they support companies with product roadmap, architecture. We have a talent team that supports our companies with key hires. Talent, as you can imagine, for a startup is extremely important because that's sort of where most of the war is today. Another senior executive from Oliver Wyman and Adia, which is a large Middle Eastern sovereign wealth fund. So she has a good handle on folks that are on the beat that we can parachute into some of our top companies. We have a 4-person dedicated M&A team that helps with buying other companies or positioning yourself for a sale as well. Sean, you had mentioned some of our emerging managers program, and I think that is something that feeds into the entire Inovia flywheel or ecosystem. So we have a fund that is predominantly focused on backing emerging managers. And emerging managers are at their early vintages. Some of them are even on their first vintage of raising a fund. And a lot of our investments in the seed and Series A side of things have come from our discovery platform. And one of the companies we'll talk about later, Flare, actually came from our discovery platform.
The experience going from banking to PE to VC is sort of like reading the transactional life cycle of a cap table in reverse. It makes a lot of sense in retrospect, given the full stack format of Inovia. With that in mind, how has that impacted the way you interact as a board member? Because being able to view things with a bird's eye view in terms of the M&A transactions, in terms of the venture investments, in terms of PE buyouts, and the way that each one plays with the other one, and any kind of divergence or convergence of interests. How does that sort of shape the way that you interact with any of your companies, ranging from Flare to Cavello, Spatial, New IO?
Awesome. So when I'm joining a board at the early stages, my aim is to guide the founders towards that end goal or share pattern recognition and stories from what that end goal looks like. Through that, I would say, also making the right introductions to get there. Also, when looking at M&A, what a good combination looks like, and how hard an integration is, right? If you have not done it before, you have not seen it, M&A sounds and looks relatively straightforward and simple. But in reality, absorbing a company, the talent in that company, making sure cultures gel, migrating tech stacks, all of that is not an easy thing to do. You get into the groove of it once you've done it 4 or 5 times. I help remind my entrepreneurs and founders as to how difficult it is, but I'm always there to remind them as to what are some of the traps that I've seen. Having seen late stage, early stage in this environment, right? Like with AI, things are changing extremely fast. The thing that matters to me is the founder, is the entrepreneur, because that's the only constant in investing, right? Today, markets go from efficiency being the end all and be all to growth being end all and be all, and you cannot predict that. The only thing you can focus on is the founder. The other thing that's changed, because I've seen this, how founders matter, entrepreneurs matter, no matter where it is, early stage, late stage, public markets, right? You look at companies like Meta. Mark Zuckerberg is still the founder and running it. Took it from that initial dip, a couple of years ago when everyone thought Meta was dead, and then Mark, rebuilt the business from there. And today, the stock is doing extremely well. Again, founder mentality. As a board member, you're there to provide pattern recognition and guidance. But at the end of the day, the founder knows this business inside out and probably knows better than you. I think it's a humbling moment as well.
That is truly humbling. A lot of venture investors may have more of a power dynamic. It largely depends on the person, it depends on the firm. It's a complex industry. I like to joke that anything from fundraising to M&A looks a lot more exciting on the outside than the inside, because there's sort of the flavor of money, and then there's sort of the type, and then there's how it interacts with the company both internally and externally. And I mean, the M&A agreements, they can read like Shakespeare. There's so much variance within private M&A. There's practically an unlimited number of ways to break down a private M&A transaction, depending on everything else, and all sorts of liquidity waterfalls and various things have a profound impact on how things get redistributed. More paperwork than I have seen
Yeah,
in
absolutely.
my entire life. It's always nice to hear about the appreciation for the founder mentality. With that in mind, the cybersecurity landscape is becoming increasingly more important. And a lot of that is because of the availability of the LLMs and their ability to integrate into various hacks. And this could be in terms of hosting and retrieving and sourcing information from the dark web. It could be account hacking, or it could be anything from SQL injection and anything in between. And so Flare is very prominent across each one of those spaces. Is there any chance you'd be able to touch on how you're working with Flare, and what they're doing to continue to benefit companies as these cybersecurity threats evolve?
Flare, to begin with, is a company that has some of the best data sets out there when it comes to the dark web and also private Telegram chats. So this is where hackers and other criminals sort of interact. And these are very much closed societies. It's not like you can just Google them and find the URL or something of that sort. A lot of the stuff that companies like Flare do is that they have really gone into some of these hard to, reach societies and communities and are able to gather information about a company, such as, hey, there is a bad actor on the dark web selling your data right now. Actor XYZ is selling it for 5 Bitcoin on the dark web. It could be that your company credentials are exposed on the dark web as a part of a broader link. Once your personal account is breached, and folks know you work at Procter and Gamble, there's a chance that you've reused that password. So there are many ways in which your data can show up in the dark web in criminal organizations without you even knowing. This is becoming more and more prevalent, with info stealers, etc., that show up on your computer, then they take credentials and harvest them. This is becoming more and more prevalent because of AI, which you alluded to. AI has really democratized hacking. And I would say we're at the start of this. Folks that don't need to know how to program anymore or write scripts. Before, you could buy scripts online. Now AI writes scripts for you. There are LLMs being sold online, Evil GPT, etc., where guardrails are removed. We're seeing attacks happen at a higher frequency rate. And most of the attacks today, frankly, aren't even the Mythos level attacks that we hear about. So Mythos was the LLM that Anthropic released. And before releasing it, it was in closed beta with trusted partners on the cybersecurity side of things under this project called Glasswing, because they felt that this was too powerful to release and it could hack organizations. I would argue that we're not even seeing those yet. But what we're seeing today is the same attack patterns as before, but happening faster. Our phishing emails are written extremely fast now. They don't have typos. They're context aware. Hey Taha, your boss emails you. I'm stuck on the highway right now. My car isn't working. I could only remember your email address, so I sent you. Can you just wire me or send me money right now? And it's a call to action. And you're sitting there. You take your phone out and you do things immediately. And that's what hackers are looking for. Now these phishing emails are also, context aware. Where things are going to get even more complicated now is imagine a world of agents. We're seeing agents, coding agents on your computer, which are, pretty much ubiquitous now. Everybody's vibe coding. We're seeing agents in contact center. We're seeing agents across, voice agents across some other areas. We aren't seeing agents everywhere yet in the size and scale that we're going to see in the next 5 years. And these agents act autonomously and they're non-deterministic. So sometimes they'll make decisions where probabilistically they're going to do something that you don't want them to do. So how do you now protect yourself from this new attack vector? And that is what AI is doing. So AI is a double-edged sword in the sense that it's making our lives easier in some ways, but also introducing a new attack surface that's we haven't seen ever before that needs to be protected in a completely different way. Right now, the question is it going to be incumbents that are going to figure out within the cybersecurity companies how to fix that, or is it going to be a new startup? And that's what's exciting about cybersecurity investing is that startups typically innovate. And so I call it the fountain of youth, where there's a constant generation of new startups based on new attack vectors, and it's a cat and mouse game.
But you're not kidding. Even in the event life cycle, ranging from brief to actual judicial action, the justice system is remarkably slow. Even when breaches are detected and they're investigated and they're going through the entire judicial process, it takes a fraction of the amount of time to get hacked as it does to sort it out in court. With multi-agent systems, the former CTO of Facebook, Jan LeSun, described some of the perils of LLMs adequately in the sense that some of the models are very probabilistic and they sound like they know the answers well. And to an extent, if they're primed correctly and they're optimized, yes. And so people have all sorts of amusing stories about fundraising adventures where the VCs might be taking a nap during the initial meetings that are flying all around Twitter. And
Yeah.
so I'm wondering, do you have any amusing anecdotes about working with portfolio companies?
Our philosophy is very different, and I know I've read sort of the stuff going on Twitter, but our philosophy is do no harm with portfolio companies. So I know there are some, folks, and I would argue that it's a small subset, not the vast majority. Vast majority of venture capital looks like us. We're of the belief that we're here to support founders. We are going into every board meeting prepared, having read everything that the founder has provided to you so that we're not wasting time. We also check our ego at the door because, as I mentioned, the founder likely knows better than you. The only thing we can provide is patterns from the past where we felt that founders fell into a trap. We're there to help them navigate around those traps as opposed to telling them how to get to your end goal and what the end goal looks like. Being respectful of the folks around the table is extremely important. If venture capital is very much a human game and the best founders only want to raise from the best capital providers who can add value because capital is a commodity. If you're not bringing your best game when you're talking to a founder, whether it's at the board, whether it's at the monthly meeting, they won't want to work with you again. I think it is a very dangerous game to fall asleep or not pay attention or feel more important than anyone else in the room because it's going to come to bite you eventually. So a lot of complexity is being introduced with new AI-based business models, which prior companies like, Zuora, Salesforce cannot handle today because they're built on data models that don't allow that.
In terms of the AI landscape, so the pricing model for AI is largely token based, and that enables a very, very, very different set of financial models to power a company in terms of going from a static fixed unit price to more of a dynamic pricing model via optimizing that token spend. Coming from a background where you dealt with investment banking, where you dealt with private equity and pension funds, where there was a lot of complex financial modeling behind that instead of various tiers and pricing unit blocks. Can you talk about how new IO is affecting that space?
Before software, a bunch of these companies were trying to create pricing, packaging, and automation around that so that once you would put together multiple SKUs, a price would come out that a salesperson could then quote to their customer. And this used to be machinery. Based on each part, that changes the complete build of it and that changes the pricing of it. So that was the original world of CPQ, which is configure price quote. And that was a world of companies like Steelbrick, which got acquired by Salesforce. Then came a world where software became everything. And we had subscription pricing, SaaS, etc., with various tiers and SKUs and all that good stuff. So that generation of CPQ and billing software was dominated by companies like Zuora, which used to be a public company and now has been taken private by Silver Lake. Snowflake, I would say, was one of the early poster childs of consumption-based pricing, where you bought credits in advance and then you burnt them down over time, and any extra would be rolled over to the next year. Now, imagine that on steroids now with AI. So you need a new system. And New.io was one of the first few companies that did this. And they had a unique insight around the data model. They were seeing where the puck was going. Folks like Zuora or Salesforce don't have the right data models in order to enable some of this consumption-based pricing. The pricing models in the AI world are changing.
The play to earn space has essentially blown up in 2026. And so back in 2021, tokens like Axie Infinity were massive. There's still an enormous market that is growing for world modeling and virtual reality, especially given a lot of the VR glasses. You're currently on the board of Spatial, and they've got partnerships with Vogue, Elle, Absolute, Jack Daniels, and Givenchy, Hugo Boss, these fashion brands, consumer non-cyclicals that go from B2B to B2C. I'm wondering if you can talk a little bit about the evolution and the economic interplay of the graphics modalities that Spatial is working with.
Today, they're extremely well known for a game called Animal Company, which is on the Meta VR. I think there is a huge attractant for big brand names to go into the VR world to interact more with their customers and to showcase their products in a way that a 2D surface cannot. Early on, Axie Infinity, some aspects of it, like using crypto early on, whether it is having NFT galleries or anything of that sort within the spatial platform. Other aspects of it was brands creating games for their own brand. Some of the brands even had buy now options within the game. You could walk around and see a shampoo and pick it up and buy it. If there are any seed or Series A entrepreneurs looking to raise capital within cybersecurity, we have an amazing CISO network, and we believe that it is extremely high value add for folks looking to break into this market. We invest in Canada, US, and Europe, so please hit me up anytime.
I appreciate you taking the time to do this.
Awesome.